Right. Good morning, everyone. Let's wait a little while for our delegates, our participants to join the webinar today before we start. Let's wait for 30 seconds. All right. Okay. So good morning to everyone. Good Tuesday morning to everyone who have joined us today for navigating demand recovery and persistent uncertainty in APAC's healthcare markets. On behalf of APACMed, I'm Christy for marketing, and in partnership with FrontierView, who is a macroeconomic research and advisory firm that provides a detailed view of the healthcare landscape in key regional markets. They will present to you what are some of the strategies that healthcare companies need to proactively adapt and shift to thrive viably in the background of an endemic phase, rising inflation, geopolitical uncertainties, and supply chain disruptions. Let us now hear from our FrontierView speakers. Over to you, Adam, and your team for this morning's session.
Well, thank you, Christine, and thank you everyone for joining us. It's a real pleasure to be here today. My name is Adam Jarzik. I am the Managing Director of APAC Research for FrontierView, and I'm joined by three colleagues on the line today who will be working with me to bring you an interesting and valuable session. So joining me are Antonio Martinez, our Managing Director of Global Healthcare Research, Sunny Xu, Director of APAC Healthcare Research, and Sarah Gunnis, our Managing Director of APAC Client Services. Together, we work with senior executives at major multinationals to help them better understand how the external environment is going to impact their business and what actions they can take to get ahead of those trends, to capitalize on opportunities and to mitigate threats. Let me show you in a little bit more depth how we intend to do that on the webinar today with a look at our agenda. We're going to begin by taking a big step back and considering the macroeconomic outlook for Asia Pacific and indeed for the globe. We are in a period of extraordinarily heightened uncertainty, driven by a variety of factors globally, which are filtering through to dynamics in Asia Pacific that are impacting companies across the healthcare landscape. And so we want to cut through that uncertainty and provide you a framework for understanding what's taking place and a clear view on what to expect over the course of the coming quarters. Once we've done that, I'm going to pass the baton on to Antonio and Sunny so they can talk more specifically about key regional trends for the healthcare sector and how you can address priorities and shift your strategies to adjust to a post-COVID environment. Specifically, we'll spend some time talking about adopting digital health and embracing new models. Now, that's a lot to get through, of course, but we do want to make sure that this is an interactive session. So over the course of this presentation, if you have any questions you want to raise for any of us, please do type them into the chat function, and Sarah will be happy to raise them either during the session if we have an opportune moment or following the session so we can follow up. With that though, given the time that we have and the amount of content we have to get through, let's go ahead and dive in to the macroeconomic outlook for Asia Pacific. Now, as I mentioned before, there's an extraordinary amount of uncertainty right now in the global landscape. And really, as we think to the rest of this year into next year, we see three key drivers of that uncertainty. Don't get me wrong, there are some near certainties that we're going to have to cope with. Drawn out war in Ukraine, higher for longer inflation, high global immunity to COVID-19. But outside of that, these areas of certainty, there are three items that are really difficult to interpret because there's so much uncertainty associated with them. These items are monetary policy in the United States, specifically driven by the Federal Reserve, Europe's energy supply, and China's zero COVID strategy. Together, these three drivers are going to have a variety of secondary impacts, including on out-of-pocket spending, investment growth, currency valuations, supply chain impacts, etc. So what I'd like to do is actually go through these key drivers of uncertainty and outline why they're impacting the global environment, the implications for Asia Pacific, and what we expect to happen. So let's begin with US Fed policy on the next slide. This is a little bit of a confusing chart, so let me explain what's on here. What you see are expectations in the bond markets for interest rates in the United States on December 31st of this year. These curves are basically probability distributions. And what you can see is that January outlined in light blue to February and dark blue to March and green all the way to August. Those curves have been shifting to the right. They've been shifting up the spectrum towards higher levels. What that basically means is that market expectations for US interest rates have risen rapidly over the course of this year because inflationary pressures have been much stronger than many market participants anticipated. And as a result, the central bank in the United States has moved aggressively to address that by raising interest rates. Why does this matter? It matters because the United States, on a de facto basis, sets global interest rates. And this will not only raise the global cost of capital for any multinational who is looking at their funding internationally, but it will also put a lot of pressure on central banks across Asia Pacific to raise interest rates or face the consequences in their currencies or in their exchange rates. We'll come back to that later because this impact varies by market, but what you need to understand is that global monetary policy is tightening and it is slowing global growth, which is going to make life a lot more difficult for companies as they strive to continue driving profitable growth. That's what's going on in the United States. Let's turn now to Europe, where we see a lot of turbulence associated with the war in Ukraine. I'm not going to go into depth on that conflict. Suffice to say, we do not see a quick or easy ending. We expect to see conflict continue, which means that there will continue to be sanctions from the EU and others on Russia and retaliation from Russia in terms of export restrictions. And we're seeing that play out right now in terms of Europe's natural gas supply. Take a look at the chart on the left-hand side. What you see is gas consumption in Europe on the far left broken into Russian and non-Russian supplies. If Russia cuts off all gas exports to the EU, Europe is going to have a really tough time with it because it doesn't have enough alternative sources to fill the gap. What that means is that we're reaching a point where European governments are likely to have to make very difficult decisions in terms of rationing. Indeed, we may already be at that point. Unfortunately, if that were to happen, we would see industry bear the brunt of it, but it would not be the only one to feel the impact. Households and commercial entities would feel the impact as well. Now, you may be saying to yourself, we're in healthcare. This really isn't a big deal to us. It's true the healthcare space will be somewhat shielded, but it will not be universally shielded. And furthermore, this will blow back to Asia Pacific because if we actually see full-scale gas rationing to Europe, it will send the region into a deeper recession than the one we already expect, which will have knock-on effects for the economies of Asia Pacific, which rely heavily on exports. Having said that, that's not the only way this could impact you. there are likely to be knock-on effects and farther up the supply chain, particularly for companies that have any sort of linkages to Europe directly through production. Let's move now to the third driver of uncertainty, which is here in Asia Pacific, and that's in China. China's zero COVID strategy is wreaking havoc on the economy and creating a huge amount of uncertainty for companies, not just in terms of what it means for consumer confidence and out-of-pocket spending, but also what it means for production and critically for logistics, for getting products across borders internally and externally. It's not just about getting products into China, it's also about getting products around China. The question that we always get when it comes to this topic is, how long is this going to last? And the expectation for quite some time was that after the Party Congress in Q4 of this year, the Xi administration would loosen up a little bit. Having firmly ensconced himself in power, Mr. Xi would feel like he had the flexibility to lift this zero COVID policy, or at least not implement it as effectively. Our research suggests that that is not going to happen. Indeed, previously we had an upside, a base case, and a downside for this scenario analysis. And in our upside, we made extremely positive, optimistic assumptions to see how good it could get. And the reality of the situation was that even if China had started importing BioNTech vaccines and producing it domestically, as it's able to do, even at present, or to grant BioNTech vaccines market access, China wouldn't open until January or February of next year, even on the most optimistic of assumptions, unless it wanted to bear huge death tolls over a matter of months. We don't even see that happening. So we actually expect China to remain closed for longer than that. If China is able to develop its own mRNA-based vaccine later this quarter and provide it market access, and then pump as much vaccine as possible into as many vulnerable individuals' arms as possible, we still don't expect the market to open until July or August of next year. And that's if they get an mRNA-based vaccine through phase 3 clinical trials, which is, I'm sure everyone on the line can appreciate, is a highly uncertain prospect. If they can't do that, China very well may remain closed, continuing to implement an aggressive zero COVID policy through the end of next year and beyond. So what does this mean if we bring it all together? If we bring it all together, these three drivers of uncertainty, we expect to see a moderate recession in the United States, starting in the second half of this year through the first half of next year, a moderate recession in Europe over approximately the same time period, and continued struggles in China until July or August of next year. Bringing that together, we expect the global economy to dip into recession along the same lines before picking back up in the second half of next year. Now, let me be clear. Whenever I use the term, or whenever anyone uses the term global recession, where you see it in the headlines, most people's minds go back to the global financial crisis, or in this region, the Asian financial crisis. A deep crisis that leaves scars on the economy and takes years to recover from. That is not what we're talking about here, although it could head in that direction if things go poorly in Europe, in the United States, and in China. Instead, our base case assumptions leave us with the expectation of a moderate recession over the course of the next 4 quarters or so, followed by a mild recovery in the second half of next year. We'll share this information afterwards. You can go through the text outlined on this slide, but that text is designed to give you a sense for how all of this comes together, how we see the global economy moving together over the course of the coming quarters. Now, you may be saying to yourself, this is not an ideal picture, but hey, maybe there's a silver lining for us here. Input costs have been out of control. It's really put pressure on our margins. It's posed some serious challenges. Perhaps recession, perhaps global recession that may not be quite so bad in Asia Pacific means good things for our input costs. That would be really helpful. That's probably going to happen to some degree. There's some truth to that line of thinking, but unfortunately, moving on to the next slide, we don't see that happening in the same way this time around as we've seen it in the past. And the reason for that is because the global slowdown is being driven from the supply side of the economy, not the demand side of the economy. In other words, the reason that we're seeing a slowdown is because input costs are so high, because there are such major shortages in commodity markets, because there are such major supply chain challenges. And what that effectively means is that while the global recession will weigh on commodity prices and input costs because demand will go down, they will nevertheless remain elevated relative to what we've seen in past recessions. Now, there is a bit of a silver line here, in addition to the fact that input costs will decline, and that is that in Asia Pacific, actually, the situation has been a bit less intense than it's been in the rest of the world. Take a look at the chart on this slide. What you see are PPI and CPI inflation mapped out by major market around the world, and we've done this globally. PPI is inflation at the factory gate. CPI is what household experiences, right? Take a look at the Euro area. Factories there are experiencing outrageous amounts of inflation. It's actually forcing many companies to dramatically reduce production or even shut down production lines. Compare that to markets on the right-hand side of the chart, South Korea, Japan, China. You see the numbers there are much lower. It's because inflationary pressures in this region are much lower. That's true for factories. It's also true for households. And that, I'm not going to get into the details of why that is, because for the sake of this conversation, it's not worth the time. But what that means is that central banks are actually under less pressure here than they are elsewhere to match the US in terms of raising rates, which you can see on the next slide. What we've done here is we've looked at the second half of the year, and we've looked at the expected difference in benchmark interest rates in the US versus major markets around the region. Basically, we expect the United States Central Bank to raise interest rates by 2 percentage points between July 1st and December 31st. And if you look across the rest of the sample, we don't expect any other central bank, major central bank in the region to come close. Some are going to be much more aggressive than others. Central banks in ANZ, for example, are going to be much more aggressive than, say, the BOJ in Japan or the PBOC in China. But no one is going to match the United States in terms of its interest rate increases. This is because of the lower inflationary pressure. Most APAC central banks are still more concerned with growth and with inflation, which is great because what that means, it's great on one hand because what that means is that interest rates in this region won't rise as quickly. Hospitals, distributors, customers that are exposed to interest rates through their own capital requirements and their capital structure, they won't feel as much pressure as will players in other parts of the world. However, I said on the one hand because there's another hand. This is a double-edged sword, which we see on the next slide. And that the other side of the double-edged sword comes in the form of currencies. What you see on the left-hand side of this slide are expectations for exchange rates across the major markets listed here in terms of appreciation or depreciation. Our expectations for this year are outlined in dark blue, next year in green. What you'll notice is that every single line, every single bar that's in dark blue outlining our expectations for this year is below the line, suggesting depreciation. We expect broad depreciation of APAC currencies against the US dollar and risk tilt towards the downside, specifically because the US Federal Reserve is jacking up interest rates fast, and central banks in this region are not. Now, the patterns look a little bit different in terms of the depreciation. You'll see that commodity importers like Japan, South Korea, they're suffering, they're feeling the burn more than you'd normally expect. Whereas commodity importers are feeling that pressure, while commodity exporters, like Indonesia, for example, are feeling a lot less pressure than they usually do. This is an example of how you can't necessarily use your experiences from past recessions to perfectly predict what's happening this time around. Briefly, I just want to offer a commentary on the euro. We don't have the slide here, but For those of you working for a European-based company who are thinking in euro terms, the euro is actually going to depreciate more, or is expected to depreciate more than every currency listed here except the yen, meaning that basically we're going to see appreciation on a relative basis of every currency here except the yen relative to the euro. So the dynamics across the USD and the euro are very different. All right, we got a lot more to get through. I appreciate you bearing with me through this time. Let me bring this all together for you on the next slide. Let's talk about what all of this means for growth. Our forecasts, and indeed, if you look at pretty much any forecasting house, their forecasts have dropped for this year and next. Growth forecasts have declined across the board in Asia Pacific, but happily, they remain squarely in positive territory, which you can see if you look at the chart on this slide. Here we've outlined our economic growth forecasts for major APAC markets for 2022 in light blue and 2023 in dark blue. If we compare Asia Pacific to other major global regions around the world, it's slated to grow much faster than North America, Western Europe, Central and Eastern Europe. A bit slower this year than the likes of the Middle East, North Africa, Sub-Saharan Africa. But as we look to next year, APAC is going to keep up that strong growth and continue to be a bright spot on a relative basis. In other words, Asia Pacific is still slated to grow faster than other major global regions this year and next, and will continue to generate substantial white space for you to fill. For more details on what this looks like in the healthcare space, let me go ahead and turn things over now to my colleagues in Tokyo.
Thank you, Adam. Now we'll briefly just walk you through some of the key regional trends we see for the healthcare sector. And then Sunny will drill down a couple of the main, the main topics and issues that MedTech companies really need to be thinking about, particularly as you're entering what for many of the companies on the line, many of the executives on the line, is the 2023 planning period. So I'll start with some of the key regional trends in the next slide. And again, we'll talk here in terms of policies, we'll talk here in terms of the environment. To start with, when we go with the first trend, first one is that political calendars, not just in terms of elections, but really in terms of the dynamics shaping policymakers in this post-COVID, endemic COVID-19 environment. We'll see a lot of short-term budgeting being focused and prioritizing reducing some of these out-of-pocket costs against other investment priorities. And we'll talk about a little bit more further in the presentation around what this means for budgets, what this means for funding. And the second trend is really at the same time connecting with a lot of these other factors, is a human capital deficit in healthcare across some developed Asia markets, but many emerging healthcare markets that the COVID-19 crisis accentuated, but it is one where you're seeing a significant shift in terms of investments in digital health, but also in terms of staffing over the long term, in terms of training over the long term, as major priorities in terms of government funding, in terms of priorities in the healthcare system. Third trend is also something that was driven very much by COVID-19, but something that also predated it, is a focus around shifting point of care settings, which is leading to a lot of regulatory and reimbursement reforms to really cement that post-COVID patient behavior changes, and to deal with certainly around the human capital, but in some cases around the shortfall in basically traditional care settings, created by the crisis and accentuated by this post-crisis inflationary and global economic growth risk factors as well. So we go into the fourth trend, and this is something that was certainly around industrial policy, but one where we're hearing both in developed markets as well as in emerging markets, is this focus around supply chain resilience, which is also often discussed as a shift towards greater protectionism. This is something that we are seeing that is continuing to be a priority within governments across, not just in China, not just in India, but across markets in Asia. And that's seeing a focus around local manufacturing and putting certain priorities for R&D investments, particularly in terms of return for a more aggressive industrial policy mix. But also we see emerging market governments also doing that against some of that desire to attract investment with some more simple import substitution, of which we saw plenty of that start to take shape over the last 2 years across Southeast Asia and certain markets in Southeast Asia, India, and obviously as well to some extent in across the rest of Asia. The fifth trend we wanted to discuss as well is you're seeing a focus around industrial policies, industrial measures to drive and prioritize digital health. I would say just in terms of industrial policy, but really government policies more generally to drive that expanded access to healthcare and reduce healthcare expenses. In a sense, as we'll talk about a bit during Sunny's part of this presentation, a real big focus around reducing the pressure points that COVID-19 has only accentuated across Asia Pacific. Now we go into the next slide. Now that's kind of puts a picture of a kind of a complicated environment, but it also creates one where when we are speaking to healthcare executives, the question is, generally speaking, again, there are differences, we can talk about them across emerging Asia, developed Asia, and certainly with China as a very different dynamic, but one where the demand pickup that healthcare companies, particularly obviously non-COVID healthcare in terms of procedures, in terms of diagnosis, in terms of patients returning to healthcare, even traditional healthcare centers to a certain extent. That creates an environment where, at least in terms of growth, the environment seems broadly positive, most of the challenges being on the supply side. Now, the key question healthcare companies are confronting is how long will this last? What will this look like in 2023? And what comes next or how can countries, governments, and obviously companies really adapt to that environment? And again, when we look in the next slide, this environment of backlog and delayed treatment is driving already resulting in higher medical expenses, which again, to a certain extent is also can be seen as a driver of more care coming into the healthcare system. All of these dynamics are driving a lot of that push and pull. And to be perfectly frank, across much of Asia, not all of Asia, but much of Asia, you see public healthcare systems still not being able to adapt to the expanded needs of these recurring patients and worsened condition patients. And where you see this shift, and you see more of that shift into private health facilities. Now, the question is, how long will this last, given the financing challenges that, while not as extreme as in other regions, certainly are still affecting much of Asia Pacific. Now, in the next slide, all of this combined together, this procedure environment, this question mark around backlogs, there's still a lot of room for recovery, is the key point here. Again, it varies among therapy areas and countries, but the dynamic that healthcare companies and MedTech companies in particular need to look at is there's still reason to hope for still continued growth, but the dynamic is coming down to certain real supply restrictions. And increasingly also, just as we'll start to see in something that we've been talking to executives since we started to see this continued supply chain challenges and inflationary factors, as we see in the next slide, those are still going to be impacting the environment going into next year. And as central banks raise interest, financing conditions become more difficult, budgeting becomes more challenging. This is going to drive a certain, let's just say, push in terms of policies that were not entirely positive for MedTech companies. And again, if we just go through all these in terms of some of the major supply side challenges around, we talked a bit about the healthcare practitioner deficit. We talked about, in many cases, particularly in emerging Asia, question marks around public infrastructure, continued supply chain challenges in terms of actually getting product into market, as well as lack of strategic plans, in many cases, even kind of broader strategic planning around addressing backlogs. And again, although right now, COVID is very much in the back everywhere but China. Let's just say that still remains something that within budgets, within planning from governments, remains something that is taking up a certain amount of budget share. And certainly remains a concern when it comes to, say, when it comes to providers as well as payers. Now, into the next slide. And again, combining this and really focusing on the medical staffing challenge itself, and this is one of those dynamics that healthcare companies have been confronting for a while. It's something that is impacting the availability of hair, quite frankly, the growth of recovery and procedures. You see these medical challenges, though, most acute emerging Asia, whether it's India, whether it's even countries such as Malaysia and Vietnam, you see these challenges continuing to drive difficulty in normalizing healthcare services. You've also seen that in developed markets, and it is a global dynamic. And the key fact is that this remains one of those key bottlenecks, driving and reducing the prioritization or the focus around basically normalization of demand across Asia Pacific. But it would be remiss of me if it was just talking about, say, the demand and supply factors, and we go into the next slide. The key dynamics that, in terms of healthcare priorities in this market, yes, that conversation around demand normalization will remain a storyline, and to be honest, likely well into the next few years for many procedures, for many, I would say, therapy areas across Asia Pacific. But it's also one where increasingly, and it's becoming clearer and clearer almost by the day, a rebalancing of healthcare priorities around cost pressures, those directly impacting the population, those impacting government budgets and financing. All of these dynamics are going to be increasingly and almost aggressively increasingly important as we go through the end of this year and into next year. Now, we go into the next slide. Again, regardless of that need to balance that dynamic around demand, as well as demand normalization, as well as these cost pressures, the key storyline that so far this year, and as we look at next year, even in countries where no immediate national elections are coming up, we see that healthcare remains very relevant. Even if COVID-19 has come into the backdrop, healthcare issues and topics remain very much, if not the top issue in elections, still very much a part of the conversation or the dynamic in terms of the agendas governments are pursuing. And again, the focus here is around driving that funding mix in an environment that's, although recovering from COVID, where as we heard from Adam's portion of the presentation, where the global demand environment and even the regional and country level growth in inflation and interest rate environments create a much more complicated picture than simply a post-COVID recovery would tell you. And I want to just then leave you with Sunny. Again, if you have any questions, please feel free to input them on the chat. Yeah, I'll leave it to you, Sunny.
Thank you so much, Antonio. Yeah, so in my two sections, I'm going to talk about how healthcare companies can address the country's priorities and really shift their strategies in a post-COVID environment, given everything both Adam and Antonio talked about. To start with some key takeaways at a high level, I think for the first 2 points, Antonio has explained it pretty well, but in the section we're mostly going to look more from the funding perspective in terms of government budget. And then basically, if we look at the budget across countries in the region, what countries really trying to do is to balance this competing priorities of managing transition into the endemic phase, but also looking at the long-term healthcare agenda, how it's going to achieve that with the limited financing it got, especially given all the macroeconomic constraints that Adam talked about. Then in terms of strategies, healthcare companies or MedTech companies should consider, how do you navigate a more complex demand environment, and then reorient your conversation with your customers based more on values. So to start with elective surgery backlog story, basically the key takeaway here is that backlogs need more financing to be addressed. So far, no country in APAC has fully addressed the backlog of non-COVID procedures that has been built up in 2020 and 2021, especially given the outbreak associated with the recent Omicron wave. So countries have been struggling to meet the demand of backlog, which requires more resourcing in terms of hospital infrastructure, healthcare professionals, and more funding. We have seen some efforts at the subnational level. So for example, the state of Victoria in Australia has allocated millions of dollars to launch this COVID catch-up plan. Basically to deal with the increasing backlog and also the waiting time. But overall, all countries in Asia Pacific will have to shift the increasing spending on COVID to address this backlog issue in the coming 2 years or find alternative financing. In terms of budget, I'm sure you know that most APAC governments have expensive healthcare budget this year for 2022, even more expansionary if you compare with the year 2021. And this is driven by several factors. First is when the budget was first being developed, most countries were hit by the Delta variant. So the unexpected disruption really guided healthcare financing, and the 2022 healthcare budget have largely demonstrated focus with funding increasing for both COVID-19 management, but also to bolster some other healthcare priorities. Even for governments that have not set out expensive public healthcare budget, they have prioritized or they have promised to ensure funding if outbreaks worsen this year. And then for future outbreaks, all governments also want to make sure that the physical resources are there. So especially for countries that have confronted several headwinds to achieving high levels of herd immunity last year, such as Indonesia and the Philippines, they're setting aside resources for COVID-19, including like bolster infectious disease management, boost vaccine purchases, and also support ICU capacity, for example. Those resources are separate from other funding flows for COVID-19, for non-COVID-19 care. So the top line story here is that endemic COVID-19 management is being built into those budget, but funding increases will not only be dominated by COVID-19 care. And in the next slide here, we'll see some common priorities across countries in terms of their healthcare budget. First, of course, endemic COVID-19 management, and in a more broader sense, infectious disease surveillance and prevention. Then the second one here, though none of the governments has explicitly cited reducing the backlog of procedures, but there will be increase in funding for primary care. The third one here, digital health transformation. I guess there's no surprise. For example, India is one example that is pushing very hard on this front, trying to drive digital health as a driver for recovery. But we have also seen accelerated development in countries like Thailand, Indonesia, and also Vietnam. Third, fourth, as Antonio mentioned, like supply is really the bottleneck here. So we have seen countries continuing investing in upgrading their healthcare infrastructure in countries like South Korea, Philippines, and certainly in China and Vietnam. I do want to spend more time on this slide to talk about supply chain. So I'm sure all of you know that supply chain fears are increasing pressure on global healthcare companies. The pandemic really demonstrated the risk of disruptions to the global health supply chain in a crisis situation with shortages of PPE, API, and also vaccines, creating very big challenge for the healthcare system in both advanced and also emerging APAC markets. This at some level has confirmed the industry policy biases of major APAC markets, but also led other governments to reassess their domestic manufacturing footprint and also supply chain vulnerabilities. What we have observed in general is that the developed Asian markets are seeking strategic guarantees with suppliers to reduce the risk of future medical supply shortage, while developing Asian countries are using various policies to bolster domestic manufacturing. So, for example, developed Asian markets like Japan, Australia, they are working with either like through stable supply initiatives or through PPP, like public-private partnerships, to secure their future supplies. But when it comes to countries like India and Southeast Asia, they are focusing primarily on boosting domestic production. So they are using more of a carrot and stick approach to industrial policy. This pandemic has really reaffirmed the need to establish a stronger domestic manufacturing, even in some cases, the full cycle manufacturing, with a strong focus on localizing APIs, essential medicines, PPEs, and also essential medical equipment for sure. And finally, last thing here, HCP capacity. It cannot be said enough that one of the dynamics across countries is the burnout and reduction in the number of nurses, physicians, specialists, and everything else is just trying to compensate for this shortage or burnout. So overall, as we mentioned, countries really trying to balance this competing priority of managing the transition into the endemic phase, but also trying to achieve its long-term healthcare agenda. And after talking about the public budget, let's look a little bit at the OOP spending. So first of all, the OOP spending increases as public providers confronted with growing pressures, and governments will have to start tackling the OOP financing. Actually, we have already started to see that in high OOP markets for sure. So first of all, I think as we talk about supply chain disruption and also the significant pricing pressure due to inflation for households, healthcare markets are seeing, especially the heavily non-reimbursement markets and patients, are feeling the effects of the rising inflationary pressures. And then those cost pressure on households will drive policy responses for sure. For the governments, they have to prioritize support for population partially to ensure a persistent economic recovery, and their coverage expansion should be expected in developed healthcare systems, which will include increased financing support for sure. But if we look at heavily OOP-driven healthcare systems, an increased use of, for example, price controls and also legislation to drive reduction in cost will be prioritized as short-term solutions to inefficient funding execution. And we have seen that primarily in countries like India, Indonesia, and the Philippines. And finally, I think industrial policy will play a supporting role here. As we will talk more later, that governments across this region will focus on driving, for example, pooled procurement, import substitution, and in the case for pharmaceutical companies, a higher generics utilization as medium-term solution to tackling spending pressures. The following slides a few examples of countries in terms of how they deal with the pricing pressure. So for example, here China, we know that at least before 2025, the country is not going to expend any more money on reimbursement. For example, the reimbursement rate for inpatient medical fees will be kept consistent at 70%. And China definitely has its own approach when it comes to financing. So, though, to be honest, a lot of our healthcare clients are pretty suspicious of this hybrid approach. But basically, what China is looking to do is to, in addition to the basic insurance fund, it's looking to develop a commercial healthcare insurance market, which could provide some opportunities in terms of market access and reimbursement for innovative therapies. But in the medium to long term, it's still too early to tell whether this approach will be effective. In terms of India, it's looking to centralize procurement. Of course, the implementation will take like a much longer period, and what they can implement is at the central level. But that's also another example of how governments are looking to deal with the pricing pressure. For Malaysia, theoretically speaking, there should be no change this year, but we all know there's a white paper to be tabled by November this year, and topics including alternative funding and also bulk procurement are all mentioned as part of the agenda. Another example coming from Philippines, though the industry had been pushing for bulk procurement instead of price caps, but the new Marcos Jr. government is likely to continue with this policy, and the pricing pressure will only get worse. So to touch upon very briefly on industry policy, on both innovation and also localization. On the innovation front, what we have seen is that for developed Asian markets like Japan, South Korea, and Australia, they are starting to prioritize innovation, at least for medium-term strategies. They are signaling growing pressure to bolster access to innovative therapies for the local population, including through additional funding. And another side of the story here is that across countries, we have seen localization pressure to continue, especially in countries like China and India. So I'm sure you have all heard or very aware of the Made in China 2025 campaign, which is driving significant uncertainty in local markets. And we have seen policies coming at provincial or local level for import substitution, prioritizing domestic products only. In the case of India, the production-linked incentives, they are basically telling the same story. So what does all this mean for healthcare companies? Means that the demand environment will only become more complex in the next 6 to 12 months, while the markets are shifting to endemic phase and countries are struggling to meet the demand. An understanding of which segments will grow, for example, therapy area or countries, will be the key to grab market share. And I know for a lot of healthcare companies, they're trying to compare or like do demand planning by comparing to the pre-COVID levels. But given everything Adam talked about in the macro environment, those things will be totally different, especially given inflation and currency situation. So how do you protect your top line and also increase your bottom line? It's becoming a very difficult strategic decision. Over the medium term, given the global recession and uncertainty, companies really need to build the resilience and diversify not only their supplies, but also customer base to be more agile. And finally, compare with other regions, we strongly believe that APAC will be the driver for profitable growth, which at some level will bring more pressure from the global headquarters on both the margin. So keep the communication channel open and consistently communicate the risks and the opportunities in the region will help for sure. Next slide here, just provide more details about how do you think about in terms of strategies, how to conduct, for example, value discussions with some questions for you to think about. So with the time left, I would like to enter or finish with our last section, which is on digital health and also new business models. So the key takeaway here, 3 points. I'm sure that the first one, not surprising at all, the digital health adoption has accelerated during the pandemic. And if we look at the drivers behind, it's both by the patients and also the providers. Of course, no country's digital health story is the same. Some are in more advanced stage compared with the others. Then the second point here about new business models, COVID-19 definitely changed not only customer behaviors, but also how open or willing they're to consider new business models, which include pricing and also contracting models. And then finally, we do strongly encourage MedTech companies to consider more changes to their commercial models, but also shifting your conversation to a more value-based conversation and stay ahead of the market trends. Here to set a little context for COVID-19, I'm sure none of the trends here is surprising. More consolidation in healthcare space, patients shifting to lower acuity settings, digital health and remote service, which we're going to talk about, and also the last one about providers shifting needs, both in terms of engagement and also operation. So if we look at how digital health development, it has accelerated very quickly during the pandemic, especially in a few countries. So for example, India has increased the budget for the National Digital Health Mission tremendously. Australia has made telehealth permanent in its Medicare. And also similarly in South Korea, we have witnessed great progress in accelerating digital health development. Here, as we mentioned, the adoption is not only driven by patients, but also by physicians or providers as well. If you look at the forecast for 2024, compare with the pre-COVID levels, there has been significant increase across all major countries. And the next 3 slides are more details on a few selected countries on how they are prioritizing digital health development. So India here, Vienna is also pushing very hard on digital healthcare as part of the digitalization plan of the whole economy. And of course, when you talk about China, there has been different industrialization plans focusing on robotic surgery. And as Antonio mentioned, all those measures or initiatives, they're really trying to ease the pressure points on the healthcare system. For some countries, it can be the lack of HCPs. For some countries, it can be working to improve the operation efficiency. And then since we're on this topic, also a little bit on remote patient monitoring, which has been growing tremendously in the region. As we see, like one of the trends is like the shifting of point of care setting, and this transition to home care really accelerated as patients sought more ways to receive at-home care. And we have seen across countries, there have been more payer support for remote monitoring. And what it means is that the need for hospital visit will reduce. And again, the conversation will shift towards value-based care. And there are some examples here in terms of application. The remote patient monitoring is increasingly seen in new segments such as diabetes, orthopedics, and with technology development, such as like in wearables and sensors. Many healthcare companies will say that their biggest competitors right now are not the traditional healthcare giants, but actually companies like Apple, Amazon, and also Google. So what are some best practices in increasing the adoption of digital health? Our suggestion is like you really need to think about what governments want. Overall, what the governments in the region, or I will argue globally, is driven by the need to provide better coverage, better healthcare products, and better quality of care. And in order to do that, governments want to develop the right policy for market access and reimbursement, for example, reduce the burden on their healthcare system, and also manage their costs pretty well. And one approach is to use data to better understand and design their healthcare system. So as long as your actions align with government needs, such as investing in HTA studies, generate superior clinical evidence, for example, and also to be able to use alternative financing for digital health, you will be in a much better position. Finally, a few words on new models. To start with the strategy level, I think given all the trends and changes we talked about in the healthcare space, think about how your commercial priorities are changing, given the change in, for example, the point of care setting, and to what extent should the level of effort against a specific customer segments change. Then moving to go-to-market strategy, this is actually also one of our management excellence projects we're doing at FrontierView. We're trying to see what some examples of innovative business models our clients can utilize to generate more customer interest. So for example, outcome-based models versus risk-sharing models. And a couple of examples may include, for example, for small and mid-sized hospitals, they do expect significant increase in leasing and shared saving models this year, given the financial constraints they are having. And for larger medical device companies, the interest from customers in novel pricing strategies, including contracting strategies, might be favorable. And also another trend we see this year is that supply guarantees for hospital disposals, such as PPEs, are strongly resonating with healthcare providers. Finally, processes and enablers, looking at your tools, what kind of, for example, data, what kind of platforms are you using? Are the platforms talking with each other? Are you making sure they are well connected, for example? All those are very important questions that MedTech companies should start thinking about and should start implementing the change for sure. And finally, slide here with some determinants of success that we think of super important for companies to consider if they want to succeed in our post-COVID environment. And of course, within each of them, there's a lot of things to talk about, but I will leave our discussion here. And I guess, Christine, I will hand back to you.
Right. Thank you, everyone. So thank you all for your time. We are on the hour. Thank you for joining us this morning. We hope you found the session insightful and helpful. Please contact FrontierView for more information on the 30-day trial, or else you can send your inquiries to info@apacmed.org. We look forward to seeing you all at APACMed's MedTech Forum on the 26th and 27th of September at Suntech Convention Halls. Take care and have a good week ahead. See you again.
Thank you.